uh, which was yesterday's high, right? The bulls had to really hold this, and then 42.50 was this level rate here. You can see it, and this was that A high that I was talking about, right? And there's the rolling 50, and so when it came down here, like you could see the guys absorbing this, and they're leaning against that volume that's stacked right there, right? And chop back and forth, and I tried to buy it, and then I'm like, oh well, maybe I'm wrong. Value started breaking, and I saw that big absorption print with that book ratio change right there. See that? And I'm like, okay, well, I'm gonna short. I'll short it. So I was leaning against that short. It came down, and there was just nothing down here. I mean, you see it. So like Ray was talking about, like what he likes to look for. So commercial guy fading it, coming down here, and I've always seen it, but I've never really understood it until he said it today. Uh, and so it comes down, and then see that 900, you 983, 657. Like this is some dude capping this, right? And then it comes down, and there's nothing, and there's like 430 that trade here. Then here's a big buyer that stepped in, and so I'm like, okay, well, so I see that buyer capper comes down, volume or the value's weak, so some guy's selling it, right? And all he was doing was this was just one big buyer in here. This was some guy that was using the one-time framing to step in. And then it came down here, and here's 1,164 contracts that traded, right? So this guy, that seller right there is the buyer. I'm guessing it's all the same guy, right? And then he trades up here, and like 3,000 contracts trade up here. And so some guys up here capping it, kind of trades up here, book ratio changes, and then it comes back down and they got nothing. I mean, 12 contracts, 62, like there's nothing down here. You get an end of trend trade. The book ratio had already changed there anyhow. And it comes down here, and then all of a sudden, like this 1,800, like here's a huge chunk of volume that trades right here. And I was short on this, and I see this faded volume as it comes down here, and then that end of trend, and then that huge volume. I just got on it. I just bought it. Uh, I was kicking myself for getting turned around in here. I was watching the volume, the value, but look, 40, like the bulls had to hold this, and so that was the that was the key with it, right? And so then once it took out, there's your breakout book ratio, your volume, that's your buyer at higher prices. And the whole time, like buyer at higher prices, buyer at higher prices. Some guy tried to sell it down here, got trapped. And then some guy just said, you know what, I'm done, and took it all on, and then up it went. And you can see it on the bigger, this is on the bigger ratios. Like here's the stop volume up here at that 47. Like look at all that volume that traded, and then it traded up, and there was nothing. And some guy came in and sold it down. Then they came in and they did the same thing down here. They just accumulated it. Some dude slammed it down. Like this was the market maker that Ray talked about. Slams it down, and there's nothing. And then the book ratio changes here, and then you have an end of trend, and up it goes. And it just is. I mean, like I said, I got turned around in here. I was buying it, leaning on this, and then I'm like, oh, I'm wrong, and because I saw the uh, I saw that right in here, right? I don't know if you can see it, but I saw that, and I'm like, okay, well, I'll sell it, and then all of a sudden, like the VIX kind of got a little bit of a bid, and then they just broke it out, right? I mean, this was just nothing but a pure jam job down here and running with the one-time framing, right? This is the intraday trend. The intraday trend is up. We broke, catch up. Here's the first 30 minutes. There's the low. There's the low. We're making higher highs and higher lows. And that's all you got to know. These trend guys will sit there and do it. We broke out of a multi-day range. We came back for the test of the breakout. All right, if you want to use that, I mean, you're looking up there. I mean, and that's what they're going for, right? There's your jump across the creek, came back, retested the breakout of yesterday's range, and then they took off. And in trending times, value lags. It just does. Lags on the foot or on the profile, like when they talk about value, like where the most time has been spent. It's going to a different time zone. A different trading area. So we balanced in here, gapped, came up, bounced, broke, ran back up, came back down. Higher highs, higher lows. And it's just what it is. But yeah, I mean, that was the sequence. That was the sequence down there. Making our high. Here's the higher or lower high, and then double bottom, and then double bottom, low, higher low. All of it goes, and it was tough. I mean, I'm not gonna kid you. It was, like I said, I got myself turned around in there. Well, it goes.
What Mike's basically saying there, guys, is this. When you trade, you develop out sequences of events that make sense of what's happening in the markets. That sequence of events becomes more detailed and more complicated as you go forward in your trading. It's not about trying to take shortcuts in the sequence of events. It's about trying to make it so that it's fast and it's accurate, so that you can make a trading decision when the sequence of events sets up. Now, what that sequence can be, now remember the question was about the book imbalance, the book ratio changing, and that idea that the book ratio changing means something. It doesn't. You don't have to use book ratios. You can simply read the tape. You don't have to use, this value line or that value line. You can use your own ideas. You can start to develop out your thoughts. The point is that you've still got to have, regardless of what it is, you've still got to have a sequence. Regardless of what it is, you're still going to have to put in the work. I've sold the top edge now on the S&P 5 times, and I've made money on every single one of them. A couple of them, yeah, when I say I've made money, I'm talking about one tick and a scratch, but I've still managed to make money on every single one of them. It's not about that. It's about taking the ones that have the highest probability, having a sequence that you can identify with as a trader, and then stepping into the deal. It's not about what your sequence is against what somebody else's sequence is. It's just about some sequence that you like, that you can identify with as a trader. So when you're looking at the S&P, when you look at the S&P, when we look at this value chart, so I've got a sequence. I've got a sequence that I take advantage of when I'm looking at this, and I can see that the sequence keeps getting challenged because obviously there's a lot of weak sellers in these areas, and they keep getting squeezed. This is basically what's called gamma squeezing in some respects. If somebody buys a call option at a top edge, it's a gamma squeeze. When somebody buys a call option at a top edge, it becomes a gamma squeeze because there's somebody that's worried about that price going higher. And it means that they buy into that storyline and it pushes the price up and it creates the event that they're worried about. So this is something that you can start to recognize, and you can start to recognize obviously the volumes. That's another piece. You can start to recognize this book reversal concept, this idea that the book reversed at a certain point on the screens. That's the concept that Mike's talking about. So when I'm looking at this, for example, on the NQ, this is the NQ just here. You can see that the NQ just here, this is a 1 minute chart. So they're quite big candles, of course, being the NQ. And you can see that we had a book reversal up here, this candle here. So it just highlights the top of that candle. So when you know that there's a book reversal at that point, obviously there's a price that's associated with that book reversal. And if there's a price associated with that book reversal, the idea is, well, where is it? Where is it? It should be visible. It should be something that you can then look at and say, well, I can see where the volume is. I can see where the sellers came in. So I can mark that price area, can I? I can mark that price area in the future. And it might be a price that I can start dealing against in the future. When the price tests back up into that, bearing in mind, of course, that at this point here, it's now 1609, the candles are diverging here at 1610, 1609 is this part here. This is a 15-second chart. So this was 1608, 1609 up here, right? Now, bearing in mind, this is the S&P, and what we're looking at is the NASDAQ, but it doesn't make any difference. I've not got it set up on the S&Ps. That's why I'm showing you the NASDAQ. For the same trade, I'm selling equities. So if I'm selling equities into this storyline, then obviously the idea is that I can see where the book reversal was. I can see where the selling came in on that book reversal. I can mark off the level at that area, and I can watch the price action as it trades around this area. I can set up some sell stops against the last trapped buyer if I want to trade that way. So I can set up a sell stop order against the last trapped buyer, and I can come in to take advantage of that little unfortunate little person in here, for example. So you see there's a sack load of trapped buyers up here. There's some trapped buyers in here. So obviously a little sell that comes in behind those trapped buyers gives me this perfect sell-off trade, which is absolutely just annihilated the downside. Look at that. Look at that drop on look at that drop there, guys. Look at that drop. It comes right off the trap buyer at 1344s, 13444s, right? And it trades all the way down to 13424s for 20 ticks of profit on the NASDAQ. 20 full points of profit on the NASDAQ there, guys. 20 full points of profit on the NASDAQ. And it's just by recognizing a process which Mike uses to start identifying a top edge. So I'm obviously putting words in Mike's mouth, but what I'm looking at here is exactly what you should be thinking about if you want to use that type of process. A book ratio change, a volume seller that you can then lean against, a trapped buyer that if you wanted to lean against, a value that is now diverging off the highs quite nicely, and then just work into that trade and then sell away from that, which has turned out to be an absolute cracking little sell-off on the S&P. It's a process. It might not be your process. It might not be my process. It might be Mike's process in summarizing what it was Mike was telling you. It looks like that's what Mike's process is, but that's personal to Mike. It doesn't have to be yours. I sell upticks into volume. I try and avoid getting too excited about that because I don't want you guys doing it. I don't want you guys selling upticks into volume unless you've got an experience of trading in a commercial way where you're selling this whole process through this leg here. Obviously, we lost the value dramatically here, so this became a new starting point for me here. So this was my new accumulation. This was the markdown phase. That's my target price. We've made the measures and so on and so on. So I start all over again. When the value changes, I reset my ideas. And we go again into that same process of selling for that beautiful sell-off, which made a lot of money. Process is just about that, isn't it? It's about finding the right elements. You can see we got a book change here. We got a book change coming in at the bottom edge here. You can see where the buyer starts setting up, so we could obviously lean against that if we were to get a retest. We know that if the book change is bullish, we would expect the price to go up, of course. If the book change is bearish, obviously it's already going to be on a down candle anyway, so it's not exactly predicting the down candle, it's telling you what happened. When it tells you what happened, we can lean against that going forward in the future. Make sense? So thanks again for that, Mike. We'll be getting started in Classroom in a few minutes. I know we're a little bit late on the Classroom starting there, but Mike was obviously doing his bits as well. So we'll get started in a couple of minutes, guys.